Lesson 15.4 is about doing the adjustment for federal income tax and posting the adjusting entries. So to start out with, we've gone through in the first 3 lessons of chapter 15 about the different adjusting entries that you need to do at the end of the accounting cycle for a corporation. One of the things that they did differently, though, was that they didn't show them to you in the order that you actually record them. We started with supplies and prepaid insurance because those are the same adjustments we did in the first section with the proprietorship. But technically, you're going to do the adjusting entries in the order that they fall in the unadjusted trial balance, which is actually also the order they fall in the chart of accounts. So allowance for uncollectible accounts is the first one on the unadjusted trial balance that falls in there with the assets. And so that's the first one that you would do the adjusting entry for. And then you would do the income summary, and then your supplies and prepaid insurance, and then your depreciation. So you just follow down in the order that the accounts are on the unadjusted trial balance, and you adjust them as you work your way down. We are also going to do an adjustment for federal income tax payable and federal income tax expense. However, we can't do that until after we have posted all of these adjustments so that we can figure out what our net income before federal income tax is to determine how much tax we have to pay, basically. So we're going to go through how you do that. So first and foremost, you're going to do all of those first adjustments that we discussed, and you're going to post them. As far as posting goes, same exact process that you've used from chapter 4 when we started doing this with the sole proprietorship. So you're going to post the amounts to the correct accounts, and you're going to come back to the ledger, and you're going to put that account number that you posted it to. So after you've posted those transactions, you're then going to do an adjusted trial balance, where basically you just go back through your ledger and you're going to do another trial balance where you list all of your accounts and what their balances are. These are going to be the balances of those accounts after adjustments have been made, all of them except the federal income tax. So then you're going to have to do this in 2 steps. So you list all those account balances except federal income tax expense. And then after the adjustment for federal income tax expense has been done and posted, then you fill those in on that adjusted trial balance. And again, we're going to go through these steps real quick. So here is your adjusted trial balance. So here's the steps you're going to take. You enter the accounts, all the accounts in the general ledger. Then you enter all the balances except federal income tax expense. Then you're going to add up your credits. Then you're going to add up your debits. And then you're going to subtract the total of debits from the total credits. And that's going to tell you what your net income before federal income taxes is. So even though you can't see the totals down here, you would add those all up. This is going to be your total credits. This is going to be your total debits. You subtract the 2 and you get 103,518.97. That's your net income before federal income taxes. So here's how you figure taxes. The federal government always has to make everything difficult. So there are different tax rates that apply to different levels of net income for a corporation. And so we look at each of these as called the tax bracket. And the tax rate associated with the tax bracket is called the marginal tax rate. So if we look at this tax rate schedule, the one that's highlighted here white, this would be a corporation that made over $100,000 net income, but less than $335,000, or not over $335,000 in net income. That's not revenue, that's net income. So our example back here, we made $103,000 net income before taxes. So this is the line we would deal with. What this tells us is that if you fall anywhere in between these two, you're going to pay $22,250 plus 39% of the amount over $100,000. So $22,250 then whatever net income over $100,000 you make, you're going to pay 39% of it. So here is the calculations for that. I'm not sure what all those funky little movements are there. So net income before federal income taxes was $103,518.97. We take out the $100,000 because it says 39% of anything over $100,000. That leaves us with $3,518.97. Times 39% means we're going to pay an additional $1,372.40 in income tax. So the bracket minimum income tax is $22,250. The marginal income tax, which is the additional over $100,000, is the $1,372.40. Add those two together, means your company owes $23,622.40 in federal income tax for that year. So when we look at that, what most companies do is they pay every quarter, they pay in an estimate of their federal income tax. So for this company, every 2 months, they paid $5,000. So at the end of December, on December 15th, they had paid in $20,000 in federal income tax to the government. They send those in quarterly payments. So since we owe $23,622.40, that was that amount we got back here when we did this little calculation here. So we've already paid in our quarterly payments $20,000. So we owe an additional $3,622.40. That's the amount of our adjustment. So when we do that, we're going to have to add that into that expense. We're going to have to add that $3,622 in as an expense. Expenses have debit balances. So to add that in, we got to debit it. And then we're going to credit the federal income tax payable account, which is a liability account. So we're going to add that into that liability account and put that in. So here's your adjustment. Federal income tax expense, debit. Federal income tax payable, credit. Then you're going to post those. And that brings that federal income tax expense up to what it's supposed to be. Now remember, we haven't actually wrote the check for this yet. You're just putting it into that expense account and into that payable account. We'll write the check in a whole nother lesson. So you post those, come back, put your account numbers up here, and that's your adjusting entry. And then you go back to your adjusted trial balance and you fill in that $23,622.40 on there. And you would also come in and fill in the expense, the federal income tax payable and the federal income tax expense. And then after those two things are done, your adjusted trial balance should equal at the bottom. And that's basically how you do those adjustments.